Hi, this is Zach from Zach's Traders Cafe with a look at some single stocks on Friday, the 2nd of September. Starting off with Go Ahead Group, which was already giving us a decent saucer reversal and a break above the 50-day moving average at 1893. Today's push to the upside by £1.50, very, very strong and predictable given that back data that we've got there on the daily chart. Likely scenario here is to head towards at least the 200-day moving average at 2365 over the next couple of weeks. And that target valid while there's no end of day close back below the 2048 August resistance. On to Rolls-Royce, which has been a recovery stock of late, very strong recovery, especially since the Brexit vote. Situation now is we're in a rising trend channel, heading towards around the £9.20 level, a channel that's got its floor towards £7. But the 9.20 target valid while there's no end of day close back below the 50-day moving average at £7.50. So looks like decent risk reward from current levels, even though we're obviously well off the lows of the beginning of the year towards 500 pence. On to Royal Mail. Here more of a struggle fundamentally, but looks as though on a technical perspective we've got a rising trend channel here from the beginning of the year. Floor of the channel normally at the 50-day moving average at 506 pence. Maybe for bulls of the stock you'd give it down to just below 500 pence as the stop loss area. Upside as high as £5.80 at this May resistance line projection. Only the cautious would wait for an end of day close above the 10-day moving average at 517 before going long of this situation, which looks to be the way to go at the moment from a technical perspective. Sirius Minerals, one of the most active small cap situations at the moment. You can see that it's retreated rather sharply back below the floor of this June trend channel, which basically topped out at the 50-plus level. Situation now is that there's a risk of a retest of the former July peak at 30.4 pence, or 30.49 pence to be precise, and back down towards the area of the 50-day moving average, 29.08 pence. But at least while above the 50-day line, we're looking at a buy on dips rather than a sell into strength, given the recent pullback that we've already seen. Smith & Nephew, a personal favourite as far as being a potential M&A situation. Obviously hasn't happened yet. Maybe might take years to occur, but at least on a technical basis, we've got this rising trend channel likely to be based around the £12 level. Upside up to 13.50 at the top of that January resistance or January trend channel, and we could see a new leg higher, especially on an end of day close back above the 10-day moving average at 12.33. Stop losses back below £12. We had a gap there at the top of the gap, 11.99, and basically we've seen the shares come down to fill that over the past week, but let's see if we can get a break above the 10-day line to start a new leg to the upside, and 13.50 for that stock. Finishing off with Soccer International. Here looks a bit miserable in the near term. We've broken back below the 50-day and 200-day moving averages at 150 and 146 respectively, especially while below the 200-day line there's the risk of a sub 130 retest, even if the shares then revive after that. That's it from me. More updates at the same time on Monday.